Good morning, everybody, and this is your Dow Jones day trade setup for today. So, as expected yesterday, pretty much sideways, nothing going on. Today, earnings kicks off with a vengeance. A lot of banks coming through today, and I think most of them are during the market session by the looks of things. So, not many of them are after the market closes, most of them are during the market. So, today could be an interesting day for the Dow. So we pretty much tracked the previous day's open, to be honest, and the weekly open as well. You can see it's down below the weekly open. There was a weekly open there. Let me just put a level in there. We can know what we're talking about. So you can see down below the weekly opening, above the weekly open, down below the weekly open, and also above and below all the moving averages. So firstly, on the 8-hour, we've got a little bit of a crossover here, which always indicates some kind of a move to the downside. But at the same time, you have a bit of a trend line that was tagged, and this little bit of red candles from yesterday is just a couple of the Fed members talking. Let's just be polite. So that is kind of, if you look at it on the 3-hour, we in amongst the moving averages, we are ranging, we are waiting for earnings to come out. For me, pretty clear that we've got a channel forming here. On the 3-hour, look at my oscillators pointing to the downside. I'm looking for them to cross specifically in this area so that they are far apart. When they cross far apart, it typically means a relatively strong move to the upside. And I think we'll probably be capped by the top of the channel that is formed. So with the macro view in your head, and you can see yesterday it was pretty solid base formed of structure. Well, not really structure, but it was a weekly, sort of the weekly open. There's the weekly open there, or the weekly close from previous week. You can see we've been bouncing around that, and now we have closed this little gap. Well, no, we haven't closed it just yet. It's still open with all these tails, and we are now below the oscillators. Below the moving averages again. So this is sideways. There's nothing really here that I want to be trading on the hour. But because it is earnings coming out, and you've got to think of this logically. A lot of companies don't sort of list on not on the JSE, but on the Dow Jones or any of the big markets and sort of the exchanges, should I say, with a view of not making money. So they're looking for investors, they're looking for people to invest in their company. So the system is designed for us that have got pensions and investments in those companies to grow. So that's why specifically in the American markets, it's controlled, it's manipulated, everybody moans about it, but that's the way it is. So it's designed for people to invest their money in the stock market and get a return over 10, 15 years that they can retire. So that's the bottom line there. So when you look at this and you think, what are the investors doing? They're always looking for value. They're always looking for opportunities to get into a stock at a cheaper price. And there are so many stocks which are fundamentally just brilliant to invest in, and there are very few that are kind of like, you sit on the side. But the majority of your stocks are always going to be pretty well structured companies that are well worth investing. The boom of day trading in stocks and things like that is what's creating our volatility, and you've got that brewing. So for me, when you look at the American market, that's why we're trending up. I'm looking for value. I'm looking for opportunities to buy into it. Anyway, a bit of a ramble there. So just coming back to the 15 minutes. The reason why I'm pulling up the 15 minutes because we have a bit of structure here, and it is off the bottom trend line, which is fairly strong. So basically what we're looking at here is a potential double bottom. You can see there's inside bar. That is the top of the structure. So we're looking for a break and retest of 36,172. We do have a bit of structure above it. So let's just use this one here. You can see from the previous 2 days. So you probably find that a break, retest, come back onto it. And if that pull back onto this holds, that would be my opportunity to buy into this. And that sort of gives you a 142 point risk because your stop is going to be below the structure, and I'll be looking for the top here at 440 points gain. So that would be a 4-to-1 trade. So pay very close attention to this. I think we're just drifting lower while we wait for results. We may even just dip below the trend line, and if we do that, look for the next bit of structure on the hour of where we possibly could be going to, and that would be roughly in this area here. So just at a glance, you can see quickly, look at the distance between the top here and that bit of structure, and the bottom here and this bit of structure here. So we're kind of just sitting in between. So I would say these are your two lines in the sand. So a clear break and retest of 36,200, we're definitely on the way up, and a clear break and retest of 36,028, we are pretty much on our way down. That would validate a flag, actually, sort of a bear flag for a move to the downside. I don't think that's going to happen. Earnings is always going to be solid, purely because that's what the companies are designed to do. So 9 times out of 10, your earnings are going to be relatively solid and pretty close to what the analysts expect. Okay, so anyway, that's kind of my view at the moment. Sit and wait. We need to wait for some of the earnings to start popping. As soon as they start coming out, you'll see a bit of volatility coming into the market. And preferably, we want to be back above these moving averages, hold them, and moving averages point to the upside, and we start trading to the upside. So we're looking for this kind of structure here to form, and that's where we make our money. Anyway, enough for me. I'll catch up with you tomorrow morning. Cheers for now.